video is not financial advice or a recommendation to invest. Always conduct your own research and consult with a professional advisor before making investment decisions. Hello and welcome. Today we're going to discuss SoFi, short for social finance, is a US-based fintech company founded in 2011. SoFi went public in 2021 through a SPAC merger and trades on NASDAQ under the ticker SoFi. It offers a range of financial services, including loans, investing, banking, and financial advice. SoFi focuses on providing modern financial solutions for younger generations. Key offerings include loans, student loan refinancing, personal loans and mortgages, investing, stocks, ETFs, crypto, and automated portfolios with no trading fees, banking, high-yield savings, checking accounts, and credit cards. 2020, they bought Galileo, which provides payment services to many well-known fintech companies such as Robinhood, Revolut, and Chime. With this acquisition, SoFi expanded its service offerings and gained access to Galileo's customer base. Acquisition gives SoFi a stronger competitive edge over traditional banks and other digital banks. Galileo's technology enables SoFi to innovate and create new product and service concepts that could attract new customers. Galileo's technology is scalable, meaning SoFi can quickly expand into new geographical areas and service segments without significant investments in building new infrastructure. This is a key factor as SoFi looks to grow internationally. Galileo provides a platform that allows SoFi to develop new business models, such as offering banking services to other fintech companies through white-label solutions. This could open up new revenue streams. Now let's see SoFi's stock price and market cap. SoFi's stock is currently trading at around $14–15, with a market capitalization of just over $15 billion. The stock has been on a strong upward trend since August 2024, gaining approximately 85% in a year. However, the all-time highs were reached after its IPO in the summer of 2021, when the stock traded at $25. At that time, SoFi's market cap was approximately $19 billion. Let me walk you through SoFi's highlights from Q3 2024. SoFi continues to expand rapidly. In Q3, they added 756,000 new members, bringing the total to 9.4 million. That's an impressive 35% growth compared to last year. On top of that, SoFi introduced 1.1 million new products, pushing their total product count to 13.7 million, a year-over-year increase of 31%. SoFi reported adjusted net revenue of $689 million in Q3 2024, a 30% growth compared to the same period last year. They also exceeded expectations by $44 million. Adjusted EBITDA came in at $186 million, with a solid margin of 27%. This is a significant jump from $98 million in Q3 2023. SoFi's financial services products reached 11.8 million, growing 33% year-over-year. If we exclude digital asset accounts, that growth jumps to 40%. Lending products grew to 1.9 million, reflecting a 19% increase. Meanwhile, Galileo accounts, which power SoFi's backend systems, rose to 160 million, up by 17%. The financial services and tech platforms segments grew 64% year-over-year. These areas now make up nearly half, 49% of SoFi's total adjusted net revenue, compared to 39% last year. Credit performance remains strong. Personal loans hit a record $4.9 billion in originations for Q3, marking a 26% growth year-over-year. Loss rates on loans have been stable, with recent loan vintages performing better than older ones. SoFi continues its streak of profitability. The company achieved GAAP net income of $61 million for Q3, a huge improvement compared to a loss in the same period last year. Looking ahead, SoFi expects full-year adjusted net revenue to land between $2.4 billion and $2.55 billion, a 23% increase from 2023. Adjusted EBITDA is projected to reach $640 to $645 million, and net income is expected to range from $204 to $206 million. SoFi is laser-focused on expanding its member base, diversifying revenue streams, and driving profitability. With its innovative financial services and technology, it's well-positioned for sustained growth in the fintech space. Let's take a closer look at SoFi's valuation and what it might mean for investors. SoFi's price-to-sales ratio, or PS, is currently 6.42. Back in 2021, this figure was an extraordinary 19.1, showing how highly valued the company was at the time. Analysts now project that SoFi's revenue will reach $3 billion by 2025. If that happens, the PS ratio will drop to 5.2, which is a much more reasonable level. When it comes to the price-to-earnings ratio, or PE, SoFi's current figure is 117. That's extremely high, but there's a reason for it. SoFi has significant potential to grow its earnings year after year. By 2026, analysts expect its earnings per share to rise to 0.44, which would bring the forward PE ratio down to 32.9. SoFi's valuation reflects its potential. The market is optimistic about the company's ability to scale both its revenue and profitability. High valuations like this come with risks. If SoFi doesn't meet the market's growth expectations, its stock price could suffer. Investors are essentially betting on SoFi delivering strong results consistently. Right now, SoFi may seem expensive, with a PS of 6.42 and a PE of 117. But looking forward to 2026, a PE of 32.9 and steady earnings growth could make it a more appealing investment. SoFi is a growth stock. It's a high-risk, high-reward investment for those who believe in the company's ability to execute its strategy. If it meets or exceeds its growth targets, today's high valuation might look like a bargain in hindsight. However, if you're looking for a safer or more stable investment, SoFi might not be the best choice right now. Thank you for watching. Please leave your comments and thoughts below. If you enjoyed this video, don't forget to like and subscribe for more content.